In this video, I'm going to share with you how to buy a seven-figure business using $0 of your own money in the down payment while keeping about 75 to 80% of the equity of the deal. Let's get into it. First things first, in 2023 and in any year you want to start buying businesses, you need to think about the risk of a recession, the risk of the industry changing, the risk of something bad happening in the specialization from which you want to buy businesses in, right? Because one thing I always teach is I don't recommend you just try to buy any old business under the sun. It's very hard to do because each business has its own dynamic that you really have to appreciate and respect, right? And so first of all, the first real step one, to get tactical and specific, is you really need to select a sector that you are going to specialize in. For us, it's plumbing and AC. That's what we specialize in. Before I got in plumbing and AC, my first business was actually in the mobile home park industry, affordable housing, right? So when I started my first business, I put on my Brighter Living hat and all I was looking at was mobile home park deals. We did a seven-figure mobile home park deal. And then for personal reasons, as well as business reasons, I pivoted to Bright Utilities, where I buy plumbing and AC businesses. But in each case, I specialize in what I do. And I picked that industry, first affordable housing and then plumbing and AC, based on the fact that these industries are recession resistant, based on the fact that these industries aren't going to be taken over by Amazon. They aren't going to be revolutionized in a way where they are obsolete if AI continues to gain momentum and steam, right? In other words, they are strong industries that aren't going anywhere, right? So if you're going to go risk capital and buy businesses, then you want to buy businesses that are going to stand the test of time. So step one is you pick an industry from which you want to buy businesses in. Once you make that decision, and it's not an easy decision, I can help you do that. If we work together, you can watch other of my videos here on my social media for more insights on how to do that. But once you select a sector, then step two is you build a deal team. You really have to build a deal team if you're going to actively and successfully buy businesses. There's no getting around this. You really need a deal team. What is a deal team? A deal team is essentially a team of experts in the respective fields of deal making that involve the deals you're going to do that are going to help guide you through this process when you get started. Okay, so specifically, you're looking for an accountant, you're looking for a lawyer, and you're looking for an industry expert. The accountant should have experience auditing financials, and the accountant should have experience really working with small to mid-sized companies, if at all possible. But preferably, this accountant has experience working with large companies as well, and has preferably worked at large accounting firms like KPMG, Deloitte, etc. Okay, as far as the lawyer, you are really looking for an M&A lawyer. In other words, a transactional lawyer, a lawyer that does deals for a living or has done deals for a living. And then for the industry expert, you're looking for somebody who has both ran and grown a small business in the industry that you want to get into, but has then also worked for a large 8, 9, or 10-figure industry player, again, of course, in the industry that you want to buy businesses in. Now, how do you get this deal team without paying cash, right? Because the whole premise of this is how to buy a business, a seven-figure business, without using your own money. Well, you give away equity. You give away equity in the deals you're going to do. Usually you can lure a lawyer, an accountant, and an industry expert for about 3% of the total equity in your deal. So if you give 3% to each of these individuals, they have 9%, you have 91%, okay? So you still have the vast majority of the equity. Once you get to this point, now you've established a sector and you've built a deal team. You actually have a nice foundation from which you can actually go out and really be entrepreneurial. And at this point now, you want to start doing three things simultaneously. And this is where the rubber hits the road. And this is where the winners win and the losers never get the plane off the ground, right? But you really need to do three things simultaneously. You need to, one, start finding deals. In other words, businesses that are for sale in the industry from which you've selected. That's the first of three things that you're doing here in this third step. The second of three things you're doing in this third step is you're starting to introduce yourself to lenders, SBA lenders, commercial lenders. The types of lenders you want to approach depend on the industry that you're going in. But for most people, especially here in the United States, who are buying $1 to $5 million businesses, which is the size of deals I recommend you go after when you get started, SBA lenders are going to be your best friend. Okay, but you're looking for deals, and we'll talk more about how to find deals in a moment. Okay, you're introducing yourself to lenders. And then you're also, third part of step three is you're introducing yourself to high net worth individuals who could provide the equity, the down payment for the business that you're ultimately going to buy. And so this is the third step, but you really have three plates that you're spinning on your finger at the same time, right? You're looking for deals, you're talking to lenders, and you're talking to investors. Now let's talk a little bit more about finding deals, finding businesses that are for sale. Biz buy sell. I know I get a lot of hate for saying biz buy sell, but you actually can find interesting deals on biz buy sell. Of course, you can make off-market calls. This is where you just go on Google and start making calls and asking to speak to the owner of ABC Business and seeing if they're interested in selling. You don't have to be clever when you pick up the phone. Literally just as simple as, hi, my name is so-and-so. I'm the founder of ABC Corp. I'd like to speak to the owner of the company. It's about a confidential matter. Please connect me to this individual. Once you get the owner on the phone, and you'll have to make a lot of dials for this to work, but this is the way to get deals. Okay, at that point, it's, hi, I'm so-and-so, and I'm looking to make acquisitions in ABC industry. Have you thought about selling your business? Okay, you can also, of course, like I said, biz buy sell, reach out to brokers, try to get their pocket listings. I've talked about pocket listings a lot. Pocket listings are basically businesses that are for sale, but that are not listed on the open market. Often the best deals are kept in the back pocket of brokers. They only give them to qualified buyers. And by building this deal team, you're going to look more qualified because you have a reputable accountant, a reputable lawyer, and a reputable industry expert on your team. So you get the cachet and the credibility of these individuals, and you kind of ride on their coattails, if you will, by proxy. Okay, but once you start getting deal flow, and once you start building relationships with lenders, and once you start building relationships with investors, at some point, obviously, you're going to start actually finding businesses that are for sale. You want to get the tax returns, the P&Ls, and the balance sheets of these businesses. Your accountant will help you analyze these financials. And then ultimately, once you find a business that looks good, key item here, it has profit on line 21 of the tax returns. In other words, it's showing taxable income. A lot of these business owners try to hide profit and not pay taxes, but that's a sketchy deal for reasons that I can explain in a different video. But for the sake of being concise, you want to make sure that there is clear profit being shown on the tax returns. But when you find a business that shows consistent profit on the tax returns year over year over year, then you essentially want to make an offer on this business for approximately 3 times earnings. 3 times earnings, 3 times profit of the business. So if the business did about $500,000 in annual profit, then you want to make an offer for approximately 1.5 million, right? Because 500,000 times 3, 1.5. Okay. Now, when you make that offer, I would recommend about 85% of that purchase price be paid in cash at closing. Now, the cash is going to come from the SBA and a little bit from an investor, and then about 15% on back-end seller finance you basically want to structure in 2 different ways. Watch my other videos for a little bit more detail on this, but the punchline, and you may have to watch this a little bit more because I'm going to geek out and get a bit technical here, but you want to put 5% of the purchase price on hold for the life of the SBA loan. This gives you standby equity. Essentially, it's a way to only put 5% cash down by having the other 5% of the SBA loan be on hold for the life of the loan in a seller finance note. And then, I said probably do about 15% of the purchase price in seller finance. So of that 15%, 5% is going to be on hold, and then the other 10% or so can be paid out over, say, 10 years on a fully amortizing term at 8%. Watch some of my videos on YouTube for more information about how to structure SBA deals like the ones I'm describing here, or kind of these deal structures. But this is really the punchline of the kind of offer you want to make. It's about 3 times earnings. It has this structure I just described where 5% is on hold for the life of the SBA loan. About 10% of the purchase price is getting paid out over the 10-year SBA loan. And then about 80% is going to be an SBA finance. And about 5% is going to be cash cash that you put as a down payment. Okay, so once you make an offer and get an offer accepted, now you pick up the phone and talk to those lenders that you were introducing yourself to a few months back and say, hey, I have this deal. Here's the deal's tax returns. Here's the deal's P&Ls. Here's the deal's balance sheets. I'm looking to raise, ABC dollars or XYZ number of dollars to finance this deal. You start getting different SBA lenders to provide you term sheets. Simultaneously, you're calling up those investors and letting them know what you are able to do. You potentially want to give them equity in your deal, right? Equity is a good place to go. You can give them 10 or 15 or maybe 20% of the equity in your deal for putting in 5 to 10% of the purchase price in cash. So you can give them a bit of an equity arbitrage. For example, again, if an investor kicks in 10% of the purchase price, maybe you give that investor 15 or 20% of the equity in your deal. At this point, you've given away about 9 or 10% of your equity by building the deal team, and then maybe you give away another 10 or 15% equity to an investor. You're still holding somewhere in the realm of 75 to 80% of the equity in your deal, your 7-figure business acquisition, and you haven't put in any of your own money. It's just sweat equity, okay? So this is you keeping about 75% of the ownership of a 7-figure business using $0 of your own money. Pretty slick. At this point, obviously, you raise the capital, you get the deal done, and then you stabilize the thing. I told you I'd keep this video under 10 minutes. So if you want me to make another video following up on this process and going in depth about how to, stabilize the business post-close, I can do that. But for now, follow for more. Thumbs this thing up or like it or whatever platform you're watching on. Thanks for watching. I'll talk to you. Bye-bye.